Yeah, hi, good morning, everyone. On behalf of Equirus Securities, I welcome you all on the fourth quarter FY22 earnings conference call of Rolex Rings Limited. From the management side, we have Managing Director Mr. Manish Medeka and CFO Mr. Hiren Doshi. Without further ado, I hand over the call to management for initial remarks, and post that we'll follow up with a Q&A. So over to you, Hiren bhai.
Thank you, Ashutosh. Very good morning to all of you. Would like to welcome our update call for the Q4 earnings for the Rolex Rings Limited. We welcome you all. We are very much thankful for the support what the you and your investor given to the company. Would like to take you through the quarterly as well as the annual numbers for the FY22 and more particularly Q4 numbers. Company has performed out well as per the intimations earlier, as per the estimates what they have made. They have already surpassed certain level of revenue as well as the margin in all way. Would like to take you through the numbers. The total income for the quarter for FY22 was 294 crore rupees versus the earlier quarter of 243 crore. There we reports almost 21% growth from December quarter to March quarter. If we compare the quarter FY21, the last quarter of FY21, company has recorded somewhere about 37% growth in this current quarter. At the same time, the EBITDA has also gone up. Q4 company has recorded EBITDA of 720 million rupees, which is almost 24% or more than that. In Q3, that number was 527 million, which represents EBITDA of 22% nearly. As we said earlier also, that company is very much confident to have the consistent margin, consistent EBITDA level. Thereafter, if we check the PBT PAT numbers, the Q4 for the FY22, we have recorded PBT of 60 crore vis-a-vis 44 crore of Q3 FY22. In terms of PAT numbers, the company has recorded 39 crore in Q4 FY22, and which was 30 crore in earlier quarter. In terms of operations, would like to inform that company is having more or less same kind of portfolio, wherein the bearing ring segment is somewhere about contributing 60% into the business operations, as well as 40% is from auto components. Same way, company is having revenue contribution from the overseas and domestic market, which attributes in the range of 50 to 60% from the exports market and 40 to 42% from the domestic market. We'd like to tell you that in the first time the history of the company, the March 22 quarter, where company has operations, or rather the dispatches of almost 300 crore, having monthly run rate of 100 crore in the first time. Further, company is also expecting the momentum into the same numbers and having the same kind of margin as well as the growth in overall top line and operations. We do have good inquiries and conversion of those inquiries into our customer portfolio, more particularly from the overseas market, from the Europe and USA. We are having two to three customers with whom the business is going to be operationalized from the Q2 of the current fiscal as well as in Q3, which will definitely give us push up to the overall revenue of the company and the capacity utilization. At the same time, company is also concentrating on the cost part of the components, wherein company is in process of installation of solar plant, and partially that solar plant would be operational before August or September 2022, and balance would be operationalized before end of this current fiscal. The solar project bit got delayed because of certain government approvals and getting certain consents from the government and other various nodal agencies. Would like to tell that company is having that mixed product portfolio catering to the various industries, not depending on one segment of the industry. Company is having revenue in terms of 45% from PV, which was there in 2019. If you check in FY22, that number has gone down and it has been 40% from the passenger vehicle, car segments and so on. More importantly, company is having a good command on commercial vehicle and heavy commercial vehicle, wherein the segment the company is having more than 52% contribution from that industry. As it has already been intimated, company has initiated to supply for the EV and hybrid vehicles in the last year, wherein that contributes almost 7.5% from the EV and hybrid vehicles. We expect further this to be increased in the current fiscal. It may go beyond 12 to 14% in the next fiscal. That is what our expectations and the customer schedule forecast and the awards what has been given. In terms of overall revenue, annualized revenue, the company has recorded gross revenue of 1,016 crore, 1,028 crore including other income, and 1,016 crore from the operations, vis-a-vis 620 crore gross revenue of March 21 fiscal. It is having 65% growth in overall operations. At the same time, the company has reported EBITDA of 240 crore in the March 22 fiscal FY22, which was 112 crore only in FY21. In terms of percentage, it has gone up from 18% to 23.5%. Same way in PBT, company has increased their PBT from FY21 level, which was 87 crore to 132 crore in FY22. I'm sorry, that is 132 crore is profit after tax. PBT is 194 crore from 75 crore of previous year. At the same time, company is having quite sound and robust cash flow, which is supporting to meet all their obligations, as well as expanding their facilities in solar equipment, as well as the few value-added processes to be added to be catered to the new customer as well as the current customer. Further, would like to inform that, as usual, company has reduced the net debt significantly, and the long-term debt of the company, CDR debt, company has already paid off. Hardly 25 crore odd amount is due for the long-term debt, which is a CDR loan taken from the couple of banks. Company is planning to repay that debt in next couple of years. COVID loans. Company is having EBITDA of debt equity ratio is 0.37 compared to 0.69 of previous fiscal. Company is having quite healthy ROE 24% in FY22. These are the operational numbers what we have already submitted. I don't want to go individually in all these numbers. I request the members to have any questions, would like to answer.
Thank you, Hiren sir, for that detailed opening remark. We'll now open the floor for the question and answer session. Anyone who wishes to ask a question can use the raise your hand option. And once you are done asking a question, please lower your hand. Please use the lower your hand option. We'll wait for a couple of minutes for the question queue to assemble. We have our first question from Mr. Sunil. Please unmute your line and ask your question.
Yeah, hi. Good morning. Thanks a lot, and thanks for taking my question. Could you sort of share some of the other numbers in terms of what was the other operating income for the quarter and for the year? And what is the scrap sales for this quarter and for the year?
Yeah, the scrap sales for the quarter is 63 crore. 63 crore is the annual number. For the quarter, it was 189 million, 19 crore. In terms of other income, we have, particularly in last quarter, we have reinstatement national entry into forex outstanding, which is somewhere about 36 million in the last quarter, and we have certain insurance claim which is of 8 million in last quarter, as well as we have realized gain into our working capital, as well as certain other transactions which has been reported in the quarter of March 22.
Right. So could you give what is the total other operating income for the quarter?
For the quarter, other than scrap, if I'll say, the which consists of export incentives, which consist of windmill and interest, all put together is somewhere about 11 crore.
11 crores in Q4.
Yes.
And how much of that is FX related?
FX related, it's almost the reinstatement entry, which is a national entry, that is 40 million, 4 crore rupees.
So, but realized gain will also be there, right? There will be.
Yeah, realized gain, that is not about, it's about 15 million, 1.5 crore rupees. But that is actually realized what we have during certain course of import and services, and even in the export working facilities.
Right. And sir, could you touch upon like on the we're hearing a lot of companies talk about high logistics cost, etc. So could you sort of touch upon what sort of increase have you seen, or what portion of your other expenses is coming from logistics side, and how is that moving? Is that a pressure point?
Yeah, I request my MD to reply your question. Yes, sir.
Yeah, 50% of our customer, it is FOB condition. So we don't have to pay the sea freight. And other customer, they are paying us the extra logistic cost. So we have some mechanism that every 3 months we have to show them the invoice of the logistic company. And when we started the business at that time, we had given the bifurcation that this will be the logistic cost. So whatever is more we are paying, that they are compensating every quarter.
Okay. So for us, then we can assume that logistics cost is a pass through, right? And
yes,
there is
yes.
no impact for us.
Yes.
And just last question, sir, on this power, like solar plant, you're saying getting slightly delayed. So when are you expecting it to be completed, and what sort of savings?
Yeah, sir, partially it would be to the extent of 4.5 megawatt. It would be operationalized before September 22, and the remaining would be before March 23. All put together, 16 megawatt is to be operationalized.
Right. So major portion of the benefit then will come only in FY24, right? Next financial.
Yes, entire annual benefit would be there over in next fiscal.
Got it, sir. Got it. Great. Thank you so much for taking my questions.
So we have our next question from Mr. Lakshmi Narayan. Please unmute your line and ask your question.
Yeah, you can hear me, right?
Yes, sir.
Yeah, one question pertaining to the cash flows. While there is a chart which you said over the last couple of years, and I see that earlier you had a healthy cash flow from operations, but this year the cash flows are actually drastically reduced in proportion to your PBT. predominantly driven by inventories, right? So there is an increase in inventories as per your balance sheet. So is it a transient thing or this is how it is going to be? Can you just throw some light on that?
Yes. Would like to tell you that it's not only the inventory, even the receivables have gone up. It is just because my last quarter numbers have significantly grown. So obviously the receivables level have gone up, and we need to have, because of you better know that the fluctuations in the commodity pricing, we were in practice to store certain raw material for our future and this thing. So it was a bit higher side, but again it is within the range of less than 90 days overall inventory. And but down the line we will be maintaining inventory to the extent of 75 days or something, and as well as the receivables to the extent of 80 to 85 days in overall. And apart from that, as I told you that we had a capex outflow in the current last fiscal in terms of solar, as well as we have installed new machining lines and heating furnaces, wherein the fund flow, or rather the funds have been used.
No, I'm talking about the operating cash flows because
I'm apart from operating cash flow, my outflow is there in this thing. But operating, as I told you, it's mainly contributed, or rather it has been used for the inventory as well as in receivable level.
And how do you anticipate this? Whether there will be you'll have a better cash flow conversion like what you used to have earlier, or this is going to be the new normal?
No, definitely it would be a better operating cash flow. Here, this point of time, if you check, we have also reduced significantly my trade payables also. And we were using, our inflow in such a way to get the better pricing, maybe on the payment on cash basis or something like that. But down the line, it is linked, my inventory and receivable, definitely it is linked with the operations. If the operations have gone up, it will also, the numbers will go up in the range of days, as I mentioned earlier.
Got it. And what is your new asset turnover like, right? So you're actually adding capex, I see. And how that translates into revenue for you? What is the asset turnover here?
Yes, certain new assets what we are installing, it's not what you say exclusive, revenue contributing, because those are the part of the additional facilities. For example, we do have the forging facilities available with the company. To whenever we have a good amount of incremental number of forgings, we'll have to have the machining capacity to get the forgings into revenue. So in terms of machining lines and heat treatment furnaces, what we are installing, that may give a range of 4 to 5 times revenue conversion.
Got it. So one last question: how much of our exports is to Europe, and how are we handling the the euro depreciation that is taking place? And the second question is that you mentioned that 50% of your business is FOB in exports, right? Am I right on that one?
Yes.
Yes.
Yes, sir.
Got it. On the euro thing, can you just explain a bit how much of our exports is to Europe and how are you looking at?
Yeah. In my overall exports, Europe, or rather the sales in euro, is somewhere about 35-40% of my exports revenue. And would like to tell you that with my customers, we do have pass-through mechanism in terms of forex as well as raw material pricing both. So on with the euro customers, every quarter we are revising the the pricing in terms of fluctuation for the forex also.
Got it. Thank you so much, sir. I'll get back in queue.
So we have our next question from Mr. Arun. Please unmute your line and ask your question. So we have a next question from so Arun, are you so are we connected? Okay. So we have our next question from Mr. Agam. Please unmute your line and ask your question.
Am I audible?
Yes, sir.
Yeah, Agam, please go ahead. We'll take Arun next. Okay.
Agam, you need to unmute yourself and then go ahead. You have to unmute from your side.
Yeah. Am I audible now?
Yeah, you are audible.
So I had a quick question on your. Can you throw color on your order book?
Sorry, please come again.
Can you throw color on your order book? What is the order book currently?
See, the currently order book for the overseas business and domestic, what we do have is in the range of 115 to 125 crore on a monthly basis.
Okay. 115 to 125.
25 crores, yeah.
So how are these contracts based? Is it long-term based or is it like on a monthly basis you get?
No,
These are all long-term contract. They give us only schedule. So usually all the
Sorry, your voice is coming a bit low.
All these are long-term program. So once this price and everything is settled, it is for minimum 5 years or 7 years, 8 years. So because we are ancillary, we are not, our products are not directly used. It requires process. So our products are all semi-finished products. So these are all long-term contract.
Correct. So your let's say your volume or the order book will be based on the OEM's growth. As the OEM grows, you get a uptick in your orders.
Yes.
Okay. So based on your current run rate, does it look like we'll cross 1500 next year itself?
Not 1500, but if you consider our last 3 months sales,
Okay.
We are hopeful that we will be crossing more than 1250 crore.
Okay. Thank you. That's it from my side.
Yeah. So we have our next question from Mr. Arun. Please unmute your line and ask your question. I think Arun, are you able to unmute your line? Okay. So we'll go to the next participant. We have our next question from Mr. Chetan. Please unmute your line and ask your question.
Hello, sir. So I wanted to understand on, we had a revenue growth of 65% this year, and the growth was strong on both domestic and export front. So what led to the strong revenue growth in this year, first thing? And secondly, how do you see, your growth over next 2 years? And you also alluded earlier that we have two to three new customers that are going to get added, I think mostly European customers. So what quantum of revenue are you looking for from these new customers?
Yes. First of all, the growth, I think it is not bit reasonable to compare with the last year numbers, because last year was the year of COVID and operationally it was 9 to 10 months period working. So definitely the growth is quite significant compared to previous year. But on an average, what we are expecting to have at least 15 to 20% YOY growth on our operating. And the second part, what you have asked is for the quarterly numbers. Would like to tell you that we will be maintaining the same momentum what we had in for last 3 months numbers, which is somewhere touching to 300 crores or something like that. Yeah, what was the second portion of your question, please?
The new customers which are going to get added, the export customers, what is the revenue we can get from these new customers?
See, as earlier we told you that most of our customers are multinational customers. So one of the very leading bearing customer, now they have added new 3 countries, Bulgaria, Italy and Mexico. And we have started submitting them sample. So after next quarter, means from July onward, the total revenue is will be more than 100 crore annually. And one more customer, they are making industrial bearing in USA. So that revenue has already started. So from June onwards, their bulk will start. And as we told you, one of the gearbox manufacturer customer, this year the total business is of 95 crore annually. So this year we are expecting 40 crore business from that existing customer, new business. So, and from 23 onward, that revenue will be 95 crore rupees annually from that gearbox customer.
Okay, sir. And within this 65 crore, 65% of revenue growth we had this year, how much was volume growth and how much was realization growth? If you can, differentiate that.
Volume growth is somewhere about 28%.
Okay.
Yeah.
Okay. Got it, sir. Thank you so much.
So we have our next question from Mr. Nikhil. Please unmute your line and ask your question.
Yeah, I just thank you for the opportunity. I just wanted to understand if there has been any significant order wins or new business development that we were successful in this particular quarter.
Not particularly in the last quarter, but as we said earlier also, it's a kind of continuous process, and as our MD just informed that we have been awarded programs gradually, even from the existing customer and from the new customer. One of our new customer has given us a 6 component in the third quarter of last fiscal, and we developed accordingly. Now they have also already given another 8 components to develop. So gradually with the new customers also we are getting in a piecemeal way the opportunity. The new customers what we were talking for last couple of quarters, those will be operationalized from the second quarter of this fiscal as well as from the third quarter, and full number annualized revenue would be there in the next fiscal.
Yeah, one thing I want to add, that our existing bearing customer, one of the largest bearing manufacturer in the world, they have added not 3 plants, 4 plants: Germany, Bulgaria, Italy and Mexico. So
Okay, no, that's very interesting. My second question is related to the electric vehicle BEV programs. So, what is your outlook on those programs? You have guided that for FY23 it will increase to around 12 to 14%. But are we let's say seeing more traction coming our way on the EV side?
Sir, we have mentioned you that we have various industrial segments or rather the various industries in which we are catering our products, not only the passenger vehicle, and the EV penetration would be there more into the passenger segment. And again, the way it is moving, we do not expect much traction from the EV. as well as at the same time we are also trying to develop the components for EV. As my MD just informed that with the couple of plant wherein we are supplying EV components, they have added their other plants. Earlier we were supplying in USA only. Now they have added their European plants also for sourcing these kind of EV components.
And we are not manufacturing more component for engine. We are more in wheel, transmission, and bearing. And apart from this auto component, we also make the component for windmill, earth moving equipment, off-highway, railway. So, and you know, railway is growing in India as well as in USA also. So, we are not only in the passenger vehicle segment. And most of the components what we produce for auto are going to be used in EV also.
And just on a little bit on the strategic side, so basically 3 years out, let's say FY25 plus minus. So where do you see the organization to be actually? And do you also see that the auto components part would be growing faster than the bearings part overall? Yeah.
So as we mentioned earlier also that we would be having almost 50% share of auto components on our revenue down the line. And if you ask me the ballpark number for FY25 or rather by March 25, definitely we would our aspiration is to have the revenue of more than 1750 crore.
Okay, fine. Thank you, sir. Thank you.
So I would like to remind the participant, anyone who has a question can use the raise your hand option. We have our next question from Mr. Vignesh. Please unmute your line and ask your question.
Vignesh, please go ahead.
Am I audible now?
Yes.
Yeah. So I just wanted to ask you in terms of taxation. So in Q4 we have paid tax at the rate of 25% of the profits we have generated. Are we contemplating to shift to a lower tax regime, or are we eligible to shift to a lower tax regime of 25%?
First of all, would like to tell you that till FY22 fiscal, we are under MAT. We have a MAT credit, unutilized MAT credit. So even in the FY22, we are supposed to pay under MAT, which is 15% plus. So that we are going to pay. Definitely, we are in process, or we are just exploring and appraising to change the new tax regime, which is having almost gross tax of 25% compared to 35% of the current one.
Okay, so we still have MAT credit remaining in our books, or we have
no. After utilizing the March 22 numbers, there would be a very negligible amount. It would be there, but we are inclined to towards shift of our tax regime.
Right. Because usually it happens in Q1 before, as in the start of the financial year, that the businesses decide as to whether this is. Yeah, fine with that. Also, could you tell me about the capex plan for FY23, and also what is the amount of capex and where the same is going to invest? I actually missed the earlier part if you had mentioned about it. I'm sorry.
See, in FY23, our capex would be categorized in a couple of ways. One is the pending capex for the solar, as well as the other portion is for my maintenance capex and certain additional equipments. All put together, we expect to have somewhere about 30 odd crore rupees, out of which 6 to 7 crores for the solar and the remaining for my maintenance capex and for certain new facilities.
Okay, but your capex in like FY22 was around 600 crores, right?
No, not 600, sir. It's
Sorry, 69 crores.
Yeah, 69 crore. Yes.
Yeah, sorry. My bad.
Yes.
Yeah, fine. That's all from my side. Thank you, sir.
Yeah.
Next question, from Ashutosh.
So, firstly, Manish bhai, can you provide some color that how is there any impact, positive or negative of the Ukraine war on us, basically in terms of any impact in Europe sales or new customer addition, anything, any positive or negative impact?
Ukraine war is opportunity for us because, as I said, recently one of the bearing customers added 4 countries, Bulgaria, Italy. Out of that, Germany, what they started, it is only because of this Ukraine war. They are usually bearing manufacturers do not pay the tool cost, but now this customer is also paying tooling cost. So it's for the long-term requirement. Otherwise, they would not have paid this tooling cost also.
And is this like were they sourcing from Ukraine or there's some other reason?
They were earlier. They have their own plant in Ukraine. That customer has sold all their forging facility, but they have one plant in Ukraine. So that plant is now their stock.
Volume maximum.
Okay. And secondly, on this, we had talked about having benefit of China Plus One strategy. Can we provide some color? Is it that the global customers are shifting away from China? Are we getting that benefit as well in our order book that we're getting?
See, last time I told you that this Tesla business of one of our customers, they were sourcing from China and they shifted to Rolex. Same way now they have added for the same end user Tesla for Europe, Bulgaria and Italy. So that is also for the Tesla car, EV. So these components they were sourcing from China.
Okay. And lastly, on India piece, how are you seeing demand per se, and any new order win in India as well?
See, because of the year-end or chip shortage, there was some issue. But now again, all the domestic customers, we are getting their regular schedule. So on the contrary, if we compare with the last quarter, this quarter we have all customers, they are giving us their regular requirement as they were giving earlier.
Sorry, I didn't get you what you said. In this quarter, there's same or new business?
No. Last quarter, requirement was less from the domestic customers.
Okay.
But now again we started getting their regular requirement. So it is more than last quarter.
Okay, I got it. Okay, that's all from my side. Thank you.
We have our next question from Mr. Arif. Please unmute your line and ask your question.
Yeah, hi. My question is related to your CDR. So CDR proceedings. So where are we in terms of exiting the CDR, and are we under negotiation with the banks, etc., for the balance, if any, remains?
The CDR debt, the long-term debt, we have already paid off almost before 4 months back. And now for the final, the procedure of CDR, they are in the process to do that, and they are going to check up with their, the central office.
Hello.
And yet the process has not started. We expect to be initiated in this quarter.
Hello.
And may be completed in before end of second quarter. Outcome would be there. what would be the CDR obligations.
Okay. And you also mentioned, I mean, the MD has also mentioned about 95 crore of business and then 50 crore of business from different geographies. So if I do the math, then I think the 15% growth is coming from that. So is it what you are pointing towards, around 15% kind of growth for next couple of years?
Yes, definitely. Even 15 to 20% numbers, what we have already told you, and the numbers what we have shared with you, those are the annual peak level numbers. It will start it, or rather ramp up gradually. As I told you that some customer is going to start from the second quarter, maybe from the July, August onwards, bulk supply, and the other one in the third quarter of the current fiscal. So, but the annualized revenue, the number what we told you, that is somewhere we will get in FY24.
Okay. And in terms of tonnage, how much tonnage we have done this year?
In terms of tonnage consumed is somewhere about 68,000 metric ton.
Mm-hmm. Okay. And you have also talked about, say, PSA, Avtech PSA joint venture, which is going to produce something in India for their global engines and all. So what is the status on the program ramp up?
PSA already started.
We have already started supplying that plant, and
now we have got one new their business for export.
Okay. So is it fully ramped up or is still in ramp up stage?
Yeah, domestic is almost fully ramped up, and with the certain their overseas principal plant, we are in stage of supplying their samples and this thing.
Okay. Okay. Thank you. That's all.
Anyone who wishes to ask a question, please use the raise your hand option. We have a follow-up question from Mr. Vignesh. Please unmute your line and ask your question.
Hello, sir. Yeah, considering this capacity you have of forgings, I wanted to know the capacity utilization for forging and the machining facilities. What is the current as it stands for the FY22?
The forging capacity as it is almost at the level of 60 to 62% of overall what we can achieve with the current product mix. In terms of machining, even as of now, we are getting outsourced the machining activity. So machining is always something what we are utilizing more than 85-90% as of for the equipments what we do have.
Okay. And so what is your guidance in terms of sales you are expecting for FY23?
You are asking for the revenue?
Yeah, only the revenue part, yeah.
Yes. As we mentioned, as my MD has already given and indicated, it would be more than 1250 odd crores.
Okay. That's all from my side. Thank you, sir, and all the best.
Thank you.
We have our next question from Mr. Devesh. Please unmute your line and ask the question.
Yeah, here, so I just wanted to understand on the margins front. So we have guided earlier around 22 to 23% margin band. So what's the sense going forward now?
Definitely, it would be in that range, or conservatively, I'm telling you, we are going to stick on these margins. Further, let me give you one example. Even we had a reduction on our export incentives because of certain withdrawal of export incentives, which has impacted somewhere about 1.25% on my export revenue. In spite of that, we are maintaining the same kind of EBITDA margin what we were talking. And definitely we are consistently we would be having this the numbers what is there in the last quarter or maybe in the entire fiscal of FY22. Those numbers would be in that line.
Yeah, that's it from my side. Thank you.
We have our next question from Mr. Mayush. Please unmute your line and ask your question.
Hi, thanks for taking my question. Sir, if you could please help us understand the impact of falling steel price on our business. We have recently seen almost 10-15% price corrections. How do we navigate this?
See, as we told that the commodity pricing, the raw material pricing, we do have a pass-through mechanism with our customers. Even when it was very much increasing trend in the last fiscal, we didn't have any impact of this thing. And at the same time, if the prices are going to reduce, definitely the pass-through mechanism would be applicable, and I'm supposed to reduce my component price.
So then our sales will get impacted.
Yes.
Revenue growth will get impacted, right?
Sorry?
Then our revenue growth will get impacted, no?
In terms of numbers, we can say the kind of, the decline in commodity pricing, definitely that would impact on overall numbers of revenue.
And because our margins will remain same, our EBITDA will also get impacted, no?
In terms of percentage, yes. But it's not straight away to be affected. It is always on a quarterly basis kind of thing. So something what we have just started to feel the decline of steel price, yet they have not started declining. It would be there from the June, July onwards. So and it is having always a mechanism to pass through in next quarter or so.
Okay. And sir, is it possible to quantify what would be our market share for the plants to which we supply? I mean, are we the sole suppliers or there are others? And if there are others, what would be our market share?
Let me give you an example. The kind of components what we are supplying, there we are the sole supplier to the particular customer group. With our majority of the customers, we are having, the exclusivity as far as the certain components in auto components as well as bearing ring, because they are paying huge amount of tooling cost for development of particular kind of auto component. So we are the sole supplier, but in terms of their overall book, if a bearing company in India having a very good market share and a good brand name, they are sourcing somewhere about 55 to 60% of their requirement from the Rolex only. And it's not only one, there are few other customers who are on the same line.
Okay, thank you. Thanks, that's it from us.
Yeah, we have our next question from Mr. Praveen. Please unmute your line and ask your question.
Yeah, hi team. Thanks for the opportunity. So the one question that I have is the guidance that you're giving of 1250 odd crores for FY23. So just wanted to understand, this visibility is coming more from the bearing rings or the auto components?
No, we do have, the new order booking, or rather the new dispatch schedule, even for the bearing ring as well as auto components. As our MD just informed that certain new plants at Europe, there we are going to supply bearing rings, and the other customer having a transmission plant, who are quite renowned transmission manufacturer across the globe. So it would be there in the auto segments.
So can you just put some numbers to your order book, that how much is from the bearing rings and auto components, to get some sense where the more traction is?
Sir, we would be having the overall contribution from the bearing ring. It ranges in between 55 to 60% of our revenue for the next fiscal, and the remaining is you can say 40% from my auto segments. 40 to 45%. Yeah.
Okay, and sir, if you can just give me the growth rate across these two segments on year-on-year basis and sequentially.
Sir, very frankly, will not be able to give you the growth rate of a particular segment.
Or
it
revenue.
Is, we are trying to explore with the customer. Definitely, if I'm going to explore a bearing ring customer where the development period, initial period is less compared to the auto segment, auto component business. So we are inclined to, cater bearing ring as well as auto components, both as per the fastest realization or fastest revenue booking on our books.
Okay, thanks.
We have our next question from Mr. Sonal. Please unmute your line and ask your question.
Yeah, hi. Thanks for taking my question again. Sir, just wanted to understand, right? Like last year, around the IPO time, you had sort of talked about the target or guidance of around 1250 crores of revenues by FY23. And then over the last year, we have won a lot of new orders as well. But still the guidance is at 1250 crores for FY23. So I'm just trying to understand what has been the negative, right? What has not gone correct and why the guidance is not going up?
Nothing as of now being on negative, but we would like to give you the numbers conservatively, and the growth in the business is there, and particularly, you better know there are certain hurdles which are out of control of this thing in terms of availability for the containers, the ocean freight price hike, the commodity pricing. Those were the factors, which, and again, a COVID factor. So we are just trying to give you the numbers which we can easily surpass, and we are very much confident to achieve more than that.
Yeah, so that is why I'm asking that ideally, at least on the top line, given the raw material cost inflation, the top line would have benefited by 5 to 10% because of that itself, right? So it's not, and also like you're saying, I don't know, ocean freight, do you book it X of ocean freight, or are you booking including, like you said, 50% of the customers you are booking CIF basis, right?
Yes. So that is inclusive of prices. And
so
at the
then,
same time,
so again, the logistics cost has gone up. So all that should be adding to the top line. I understand it will be not adding to the EBITDA. But so that's why I'm trying to understand that there are these factors, including raw material price inflation, cost inflation, which are adding to the top line. Still, the top line is sort of not
yeah, but
moving
Sonal,
up.
again, we are feeling the reverse wave from last few days, particularly the commodity pricing. We expect to reduce it, or rather to go down. And now it is the height of even this ocean freight portion. So we expect once the commodity price will go down, obviously the other components will also go down. So which may impact on our overall revenue number.
Right. So you are, you feel fairly confident on this 1250.
Yes. Very much, very much.
Got it. Okay, sir. Thank you so much.
Yeah.
We have our next question from Mr. Dhruv. Please unmute your line and ask your question.
Hi, thank you for the opportunity. I have a question on the working capital cycle. Could you talk about, firstly, we've seen inventory days go up during this year. So what is the reason behind inventory days being higher? Secondly, on the inventories and trade receivable side, going forward with scale, do you think there is room for improvement in reducing the number of days on inventories and receivables side?
Yeah, as I told you earlier, that particularly the inventory, which is a bit on a higher side, as we told you that we try to capture, or we try to block the raw material at a particular price. That's why it was a bit on this thing. But on an average, we expect our overall inventory to the extent of 80 to 90 days of our overall revenue. And as far as our debtors or receivables are concerned, it would definitely go up once the business operations numbers will go up. More particularly in overseas, then the number of days would be increasing. Because in domestic, we are supplying at a certain, say, 60 days of credit or something like that, where in overseas, we are supposed to extend credit of 120 days or so.
Understood. So the second question is, you mentioned that certain geographies and countries where you've added, to the existing customer, these are the new geographies which are added. Could you just take us through, generally when a new geography is added and you've been starting to supply to a particular plant, how does it generally ramp up, the sales ramp up for that particular plant or facility? So is it very quick, or is it very gradual up move in terms of sales?
See, once we supply to a particular plant of one bearing manufacturer or auto component or other auto manufacturer, they do have multiple plants across the various countries. Obviously, the requirement of particular plant is being fulfilled in terms of quality, supply chain. Definitely, it gives reference to the other plants. The product combination might be different one, and if the particular plant is being satisfied with all these things, definitely the new doors for the new plant would be open, because they know the capabilities and facilities available at Rolex. So there is no fixed point of time. It depends. For a particular kind of plant, I am supplying X kind of bearing ring only, wherein their other plant of that particular customer is there into certain segment which we are not able to produce the component. So obviously it would not be open for me. But wherever the customer is having various plant in the same segment or a nearby segment, the chances of our getting is very much there once we supplied successfully in all terms at least 6 to 8 months in a full swing with the current plant.
Understood. Very clear. Thank you so much and all the best.
Yeah, so that was the last question. I'd like to hand over the floor to the management for any closing remarks.
Yeah, very much thankful to all the participants for their patient hearing and for the interest what they have taken. Would expect the same kind of support in future to build up a quite good business model for the Rolex. Thank you very much for joining.